Supermicro designs and ships high-density servers, liquid-cooled rack solutions, and complete AI factory building blocks used by hyperscalers, cloud providers, and enterprise data centers. They're one of the companies that actually builds the racks and node-level systems that hold NVIDIA, AMD, and other accelerators, and they've been first to market with liquid-cooled Blackwell-class solutions. If you're training huge AI models, SMCI is on the shopping list. Think of SMCI as the custom home builder for high-performance computing. You design the floor plan, architecture, pick the power system, GPUs, CPUs, and supermicro builds and wires the mansion so it doesn't catch fire when you crank the AIs to 11. Lately, social feeds and discussion boards have lit up with two themes: financial disappointment, chatter pointing to weaker EPS and revenue metrics year over year, and headlines about missed quarterly guidance. People share charts and say, "Where's the profit?" after seeing EPS declines and lower than expected margins. Some summaries show quarter-level EPS down versus last year and gross margins compressed into single digits. Institutional trimming posts noting hedge funds and certain institutional owners paring back positions in recent 13F filings. Commenters read that as a signal that professional money is losing conviction. There are legitimate reports of funds reducing exposure, and some headline investors have either trimmed or rotated into other AI-linked names. Tone on X/Reddit/finance threads tends to be dire. Book the L or SMCI is toast. That's normal. Social channels reward the hot take. But do the facts support despair? Let's unpack them. The hard numbers: EPS, revenue, margins, and the $13 billion backlog. EPS and revenue swings. Some quarters have shown an EPS decline year over year despite revenue moving directionally upward or missing expectations depending on the period. For example, Q4 FY 2025, as publicly reported, showed revenue growth but produced pressure on margins and an EPS print that fell from the prior year's comparable quarter. Investors and social media analysts point to those declines as evidence that revenue growth isn't translating into proportionate earnings improvement. Gross margins and profitability. SMCI's gross margins have been under pressure in several recent quarters. Single-digit quarterly gross margins were reported around some releases, and full-year margins hovered in the low double digits. The reasons: product mix, lower margin systems, competitive pricing, tariffs, supply chain shifts, and the high cost of ramping manufacturing capacity for AI servers. That's why people worry that big order numbers don't automatically equal big profits. By the way, if you are benefiting from the content so far and want more like this, like the video, it means much to me, or hit the subscribe button and comment the word more. Just go ahead and type the word more so I know. Now that you have commented, let's continue. The $13 billion figure, backlog versus recognized revenue. Here's the headline that dominates both bullish decks and bearish retorts. SMCI has reported over $13 billion in firm orders/backlog tied to AI infrastructure and NVIDIA Blackwell systems. Company press and multiple market write-ups cite a record backlog of this scale, a huge number that could, if realized, support a major revenue surge in upcoming quarters. But, crucial nuance, a backlog is orders booked, it's not revenue in the bank or profit guaranteed. The skepticism is, will these orders convert on schedule, at expected margins, and without inventory or tariff headaches? Social media's short answer is, maybe, but show me the margin. Institutional investors and analysts are asking the same thing more politely. Why the skepticism isn't totally unreasonable. There are a few concrete reasons investors question the profit translation: low gross margins on reported quarters. A company can have big revenue but narrow margins. Investors who focus on EPS and free cash flow want to see margin recovery. SMCI's recent reported gross margins, quarterly and full year, were suboptimal for a high-growth server vendor, leading to skepticism. Guidance cuts and cautious commentary. SMCI has at times lowered outlooks due to tariff exposure, timing shifts in customer deployments, and delayed GPU shipments. When management revises guidance downward, trust erodes and social commentary jumps to trend is broken. Competitive pricing pressure. Hyperscalers and cloud providers are ruthless negotiators. If SMCI competes on price to win volume, margin compression follows. Social posts often spotlight the big number but small margin paradox. So the chorus saying, "Great backlog, but where's the profit?" has concrete anchors. That's an important reality check. Hedge funds selling, headline or trend? Yes, several funds have trimmed positions, and some notable managers rotated money elsewhere. That's visible in 13F snapshots, a mix of buys and sells across institutions, with some prominent funds reducing SMCI exposure while others increased. It's normal for volatile, high-beta names to see active rotation, and cuts by a few big funds make for memeable headlines. But many funds still hold large positions. The total institutional ownership remains substantial. Hedge fund trimming isn't a binary "this is dead" signal, it's part of portfolio repositioning. Yes, the social media tone sees trims as capitulation, but capital flows are nuanced. Look at the magnitude, percentage of holdings reduced, not just the existence of a sale. Large orders versus profitability, how the math can hide the truth. This is the $1,000,000 or $1 billion debate. Backlog equals future revenue potential, but revenue recognition depends on delivery, component availability, GPUs, tariffs, and shipping. Margins depend on product mix and cost control. If SMCI wins orders at tight margins to secure market share, top-line growth won't translate to EPS growth. Timing mismatches, customer delays, port congestion, can shift revenue between quarters, hurt current period EPS, and create the impression of a miss when the economic engine is intact. So social media skeptics are right to demand margin proof. But bulls respond, the $13 billion backlog is real, SMCI is shipping liquid-cooled Blackwell systems at volume, and once supply and timing normalize, margins and EPS could recover. Both sides cite evidence. You need to watch the margin trajectory and conversion rate from backlog, recognized revenue. It's like a restaurant that suddenly signs huge catering contracts for the next 6 months. The bookings are real, but you still need to hire and train staff, buy ovens, and avoid burning the food. Until the events happen and guests pay the bills, you can't guarantee profit. Now we pivot to the fun and speculative part, orbital data centers. In plain English, Elon Musk and others, Blue Origin, Google looking at options, are publicly exploring the idea of putting compute into space, satellites or orbital platforms that host processors to run AI workloads with abundant solar power and radiative cooling. Musk has suggested Starlink upgrades could carry processing payloads, and mainstream outlets have covered SpaceX's interest in space-based compute. Why is this relevant to SMCI? Because SMCI builds the racks, liquid cooling, and custom nodes that power AI factories on Earth. If a credible market emerges for space-hardened, low-power, highly integrated compute nodes, the companies that design, test, and supply those modules could be huge beneficiaries. Here's how the path to upside might work. How orbital data centers could drive real upside for SMCI, step by step. Demand for specialized, ruggedized compute modules. Satellites and orbital platforms will need densely packed, power-efficient compute nodes that are light, reliable, and thermally efficient. Supermicro already sells liquid-cooled Blackwell racks and high-density GB300/GB200 solutions, technology that's directly relevant to building energy-efficient, heat-managed compute in constrained environments. SMCI's experience with rack-scale liquid cooling could translate into space-grade variants or partnerships. Customization and integration services. Space platforms need more than off-the-shelf boxes. They need packaging, radiation mitigation strategies, special power management, and remote management firmware. SMCI is a systems integrator. Its team could sell space-adapted designs, certification engineering, and supply chain logistics. That's higher-margin consulting and hardware combined. If SpaceX, or Blue Origin, or a hyperscaler partner, commits to dozens or hundreds of orbital platforms over a decade, the units per program could be large, and importantly, recurring. Satellites have refresh cycles and upgrades, and in-orbit replacement projects could create a steady flow of demand. That shifts SMCI's business from one-off server sales to multi-year program revenue. Halo effect across terrestrial data centers. Winning space contracts doesn't just bring direct revenue, it signals engineering credibility and can help SMCI win premium terrestrial deals. If customers believe SMCI can deliver hardware that survives orbit, they'll trust its earthbound solutions even more. Halo effects help margins and strategic positioning that could hit Smci to $200 in coming years. Note this as well. Do you want peace at heart? The next day John seeth Jesus coming unto him, and saith, Behold the Lamb of God, which taketh away the sin of the world. John 1:29. Fear God, and give glory to him, for the hour of his judgment is come, and worship him that made heaven, and earth, and the sea, and the fountains of waters. Revelation 14 verse 7. I appeal to you to fear God and obey his law. For his commandments are sure and his word everlasting. Do not be afraid, do not be discouraged. Want more information? Please check the description section. That's the end for now. If you have watched until the end, drop a comment like this, I stayed until the end. Just comment that I stayed until the end. When I see this comment, I will give you a heart. 3 more favors I request from you. First, like this video, subscribe and then turn on the notifications bell. If you do this, you greatly encourage me to continue bringing to you insightful information. Do not miss out on our future videos full of insight. All I am asking is your subscription. Thanks for joining us today, your support means so much to us. Do not hesitate to share this video to help someone who may benefit. I recommend that you watch the next video, subscribe to the channel and share your thoughts about today's video. Wish you God's blessings and care. Wait, watch and pray. See you in the next video according to God's will.